What's good, everybody? How's everybody doing?
Thank you.
Good. Cool. Let's see how many people we have in here right now. We got 28 people in here. Okay, cool. Real quick, if those of y'all joining, if this is your first time to see this, throw a 111 in the chat box. All right. Okay, if you are in the room now and you've seen this before or seen a recording, throw the 777 in there. I just want to make sure everybody's.
Just to show you.
Yeah, just make sure everybody's okay. Boom. Okay, cool. So yeah, we definitely have more returning students than first-time students, but don't worry, everybody's welcome here. So we are going to, all right. Everyone, if you actually would, go ahead and screenshot this or take a picture. This is going to be the most updated version of the rules we're going to be using to do this trading strategy. We're going to be referring back to this. Those of you who've seen this know how the rules go. Those of you who haven't done it, we're going to be referring back to this throughout the entire session. So I'm going to give y'all about another 5 seconds or so to get a picture of that, and then we are going to move forward. So then, okay, we're trading a strategy called meat and potatoes. The reason it's called meat and potatoes is because, hey, that's all you really need to eat. There's a bunch of other strategies beyond this that are more advanced. We call that dessert and appetizer. We might touch on some of that stuff today, but right now for the beginning, I'm going to go over trend. Everyone here should already understand trend pretty well. Anybody have anything they want me to talk about tonight?
White space, boring candles and exception.
White space, boring candles, and exception. Okay. Anybody else? Second part of your strategy, the right side of the paper. Yeah, we will absolutely. We're going to spend a lot of time. We're going to spend very little time on trend today. We're going to spend a lot more time on the right side, and that will cover the white space, boring candles, and exceptions. And as y'all know, I'm working on this laptop, and I missed stuff in the chat. I appreciate you too. Thanks for being here. If I'm missing something in the chat, someone just speak up, let me know, or feel free to turn your microphone on at any time. Again, everyone knows this is an interactive session. I want y'all to be speaking. I want y'all to be asking questions. I want y'all to be answering questions, because the more we all go through this together, the better we get it. Y'all are new to this. So when you guys have a question, everyone else is probably thinking something similar. So the more that we talk about these things from y'all's perspective, the more everyone understands. So please speak up in this session. Everyone is welcome. So getting started, meat and potatoes. Again, this is all you need to eat. This whole strategy of trading, I got a lot of feedback coming from somebody. So if you're not speaking, if you can mute your mic, I'd appreciate it. So this whole strategy, meat and potatoes, is based upon being able to trade within the trend.
Noah, microphone. That's good.
Boom. Cool. So again, this strategy is all in regards to trading with the trend. These set of rules we're going to follow on any time frame that we're on. We're able to use these set of rules to identify what the trend is on any time frame. And once we have done so, that is called the left side. Here on your sheet, everyone sees it's where it says trend, ignore wicks. So we call that the left side. Here on the right where it says zone, levels, respect wicks, that's the right side. The left side we use to identify trends. Once we've done that and all of our rules are set up, we go to the right side to look for a trade. So I know there's pre-recorded videos back in our Discord, so I go over all this stuff. I think there's like 3 sessions now. Second session's my favorite one so far, but all this stuff's explained in there. We're going to go over it now. So let's jump to it. In reference to trend, when we are doing this portion of the rules, we're always going to ignore the wicks. We're going to come back to the wicks because the wicks are super important, but that's right side stuff. So in regards to this side for trend, we ignore wicks. We're going to go to step 1 to identify what our action candle is. So in reference to this trading style also, whenever it's all about colors, red and green. And if you ever hear me mention blue is green. It's just 2 different, that's FXCM and Owanda I trade on. So kind of different, same candles, but same different colors. Blue and green are the same. Red is always red. But in reference to this trading style, whenever you have candles next to each other that are the same color, it counts as one candle. Reason being, when you go, whatever the time frame is for whatever the candle is showing, the only reason the candle is ending and a new one's beginning is because whatever that time period is ends and the next one starts. Like, so to give you an example, right here, I've got see how I have these 1, 2, 3, 4 green candles? I'm on a daily chart. If I take that to a weekly, that becomes 1 green candle. Why? Because that's composed of what 5 daily candles are in a week, but it's moving up, so it's going to be green. So whenever we see candles next to each other that are the same color with no break in color, we always count that as 1 candle. So first one being green candle, right? 1 green candle. Next to that, we have 2 red. 2 red candles count as 1 candle. To the left of that, we have 3 green. 1, 2, 3 green. Those count as 1 candle. To the left, 1 red. To the left, 1 green. 1 red, green. You guys get the point. 4 green here count as 1 candle. 4 green here count as 1 candle. 2 red, 1 candle. Pretty easy. You guys get that. So back to step 1. Step 1, we're going to identify what we call the action candle. The action candle is called the action candle because it is the most current candle. It's where price is actually moving. That's where the actual action is. Makes sense? So step 1, what do? We identify what our action candle is, or the color of our first candle. What is that? Here in this instance, we have green, right? Everybody see that? 1 green candle. What does it say? We identify that, ignore. Step 2, we're going to identify what we call our anchor candle. Anchor candle is our playing field, right? We'll come back to that. Well, to the color to the left, we have this 1 green candle. We go to the left, we have what? 1, 2 red candles, right? That is our anchor. We mark the high and the low. Look at your sheet. Step 2, anchor candle, mark high and low. I marked the high side. Now I'm going to mark the low side. Boom. Okay. Mark the high and the low. Now we go to step 3. Step 3 is it sideways or engulfed? What does that mean? We look to the color to the left of our red anchor candle. And what is that? Green, right? How many green? 1, 2, 3. So I have 3 green candles to the left of my red anchor. We then have to ask ourselves, are these green candles bigger than our red anchor? The answer to that question is yes. These 3 green candles are bigger than these 2 red candles. So we call that engulfed and or sideways. We skip it, we move on, we go to the next chart. In reference to this right now, though, just for example purposes, and we're already here, I'm just going to go ahead and use this here. We're going to pretend that this is current time. So current time, what do we have here? Step 1, identify our action candle or color. What is that? Red, right? We have 1, 2 red candles, right? What do? We identify those, and then we ignore it. We then go to step 2, to the color to the left. What's the color to the left? Green, right? We have 1, 2, 3 green candles. We mark the high of our green and the low of our green, right? Okay, cool. Step 3, is it sideways or engulfed? We look to the color scheme to the left. What is that? Red. How many red? 1 red. Is our 1 red bigger than our 3 green? No, it's not. It's smaller than our 3 green, so it is not engulfed. It's not sideways. Cool. Now we get to go to step 4. Step 4 is, what is the control candle? Who is in control, the highs or the lows? How do we determine that? We take the high side of our anchor and we go across to the left till we hit a wall, and or a wall is a body of a candle. Not wicks, but bodies of a candle. This happens way back here. We don't see it. Okay, cool. Go to the low side. Here on the low side, we go across till we hit a wall, right? You see how we hit a wall right there? It's not the bottom of the candle, but it's actually the body of the candle, right? So it hits a wall there. We then go down to look for color change. We hit a green wall. We go down till we look for color change where it goes from red to green. This happens right here. We're going to go ahead and mark that where the color change happened. Boom, right there. Okay. We then ask ourselves, so step 4, high-low control candle. If the low side is in control, you look at your sheet, we have what we call an uptrend, right? What do we have here? The low side's in control, so we have an uptrend, right? Cool. So then we get to go to step 5. Oh, first, high side, remember again, we go across, I probably should explain that because a couple of you haven't seen this. High side, we go across to the left till we hit a body. We don't see it, right? Low side, we go across till we hit a body. It happens right here. You have to ask yourself, before you can identify if it's an uptrend or a downtrend, you ask yourself, what one happened more recently in time? Not price, but what one happened more recently in time? Here on this chart, from what we can see, the low side happened more recently in time. Why? Because this is the daily chart. On the high side, it could be weeks, could be a month back. We can't even see it. On the low side, It's a couple days back in time. What one happened most recently in time? The low side happened more recently in time. We then, once we've identified the low side happened most recently in time, we call that an uptrend. You see on your list, step 4, who's in control? If the lows are in control, the buyers are in control, that is an uptrend. We then go to step 6 to determine if we have a setup. In order for us to have a setup, we have to ask ourselves, this is when we go back to the action candle. What color is our action candle from step 1? Look at the chart. Okay, what is it? What is the first color? Red, right? These two red. These two red are our action candle. What does the sheet say that we need? If it's an uptrend, we need to have what color action candle do we need based upon our sheet? Our sheet says red, right? What do we have? Red, correct? We have red action candle. Step 5, we have an uptrend with a red action candle. We now have uptrend with a setup. So we then got to go to step 6. Step 6 is, do we have a level break or an anchor break? We identify our anchor, right? The bottom of our anchor. If it's an uptrend, it cannot break the low of our anchor. Our action cannot break the low of our anchor. Is the action breaking the low of our anchor? No, it's not. I don't know who's talking right there, but is the action breaking the low of our anchor? No, it's not. So we then have what we call an uptrend with a setup, without an anchor break, so we're good to go. Then this is where, when we have all those things, step 1 through 6, everything exists how we need it to, we then are able to go to the right side to identify what a trade is. I'm gonna go through this like one more time, and then we're gonna jump on the right side stuff, just that way it's fun, because I know a lot of people are looking for that. So, boom, okay. So, okay, so here, step 1, identify our action candle, correct? What is our action candle? Red, right? How many red? 3. 1, 2, 3 red candles. We identify those. We ignore them. We then go to step 2. What is our anchor candle? What is the color to the left? Color to the left is green, right? How many green? 3 green. 1, 2, 3 green. We mark the high of our anchor and the low of our anchor, right? We then go to step 3, and where we ask ourselves, is this sideways? Is the color to the left, green anchor, color to the left, red, are our 2 red bigger than our 3 green? The answer to that question is no, they're not bigger. It's not engulfing it, so we're not sideways. We're good to go to step 4. Step 4, who's in control? The high side or the low side? Again, we take the high of our green anchor, we go left till we hit a wall or body of a candle. It's way back here, we can't see it. We take the low side of our anchor, we go left till we hit a wall. We come down till we get a color change, right? We hit a green wall, we go down till we see it go from red to green. It happens there. Go ahead and mark that. Boom. So that happens here. Okay, step 4. What one of these happened more recently in time, the high side or the low side? Well, we can't even see the high side, so obviously it's got to be the low side. We go across, it hits here. So in relevance to time, what one happened more recently in time, the low side did. If the low side did, that is the buyers. The buyers are in control. Buyers are in control, so we have an uptrend, right? Sheet there, high, low, control candle, lows. If the lows are in control, we have an uptrend. If the highs are in control, we have a downtrend. The lows are in control, so we have an uptrend. We then go to step 5. Do we have a setup? If it's an uptrend, what color do we need our action to be?
Red.
Red. What do we have here? Red, right? 1, 2, 3 red candles. Cool. So we are uptrend with a setup. We then go to step 6. Do we have an anchor break or a level break? Is our red action breaking the low of our anchor? The answer to that question is no. It is not breaking the low of our anchor. So we are good to go to the right side. Before we go to the right side, does anybody have a question? Any of my new people, any of my returning people, do you have a question over this before we go to the right side? And we're going to touch on this more throughout the session.
All this, because I was taking some notes.
Yeah.
All this that we just learned right now, like this little.
Yeah.
So what should I like title it? That's what I'm trying to ask you.
These are left side. And actually, I just got an email. Y'all bear with me 1 second. I should have a PDF of the document I wanted everybody to have.
I'm one of the new ones, by the way. So
you're one of the new ones? Cool. No, you're good.
Yeah.
I took a picture of your screen. I can send it to him.
Yeah, send it to him.
Cool. I also missed step 4 and 5. I'm sorry.
Step 4 and 5? Okay. Yeah, we'll do that one more time. We'll see. Hopefully this will reload real quick. Go ahead on your screen while we're waiting for that. Take a picture of this. Hopefully by the end of the session when my email refreshes, I'm going to download this into the chat so everybody has a copy of it. You got it?
Oh, yeah, I got it.
Okay. All right, cool. So real quick, before we go to the right side, since you missed step 4, I'm going to go through the steps real quickly, 1 through 6, and then, yeah, we'll go from there. So step 1 is identifying what the action is. What is the color pattern? First color pattern is red, right? These 3 red. That's our action, step 1. We identify that, we ignore it. We then go to the left, to the color to the left, and that is green, right? 1, 2, 3, green. We call that our anchor. We mark the high of our green anchor and the low of our green anchor, right? We then go to step 3. We have to determine if our anchor is sideways. We go to the color to the left, and that's red, right? 1, 2 red candles. Are our 2 red candles bigger than our 3 green? The answer to that question is no, they're not bigger. So it's not sideways, it's not engulfed. We get to go to step 4. Step 4, we're identifying who's in control. The high side or the low side? Are the buyers in control or the sellers in control? The lows or the highs? We look at our sheet, right? Control candle, lows, uptrend, highs, downtrend. Okay, how do we determine that? We take the high of our anchor, we go across till we hit a wall, or what we call a body of a candle. We can't see it on the high side. We go to the low side. We go across till we hit a wall, not wicks, but a wall, a body of a candle. See, it hits here on the body of the candle, right? Green candle, we go down till we get a color change. We hit a green wall, we go down till we see where it went from red to green. That happened here. We marked it. We then go back to our sheet, right? Who's in control? Is the buyers in control or the sellers in control? To determine that, to have the answer to that question, we have to ask ourselves, what one happened more recently in time? Did the high side hit a wall first or the low side hit a wall first in regards to time? High side we can't even see. Low side we see it happen right here, so we know that the low side happened most recently in time. Okay, great. Low side happened most recently in time. That means we have an uptrend. The buyers are in control. The lows are in control. We then go to step 5. Do we have a setup? In order to have a setup, we need to have what color action candle? Red. The answer to that question is red. We need to have a red action candle. What is our action candle? Red, right? Cool. So then we get to go to, so we have an uptrend with the setup. Then we get to go to step 6. Do we have an anchor break or level break? What does that mean? Is our red action candle breaking the low of our anchor, really closing below our anchor? The answer to that question is no. We do not have an anchor break or level break. So we are uptrend with the setup and we're good to go. Steps 1 through 6 is purely identifying what the trend is. That's all that we're doing is what's the trend? Is it an uptrend with the setup, a downtrend with the setup? Is it sideways, biased to the upside? Is it sideways, biased to the downside? What is it? We have uptrend with the setup. That's what we're looking for, either uptrend with the setup or downtrend with the setup. In this instance, we have uptrend with the setup. Then we get to go to what we call the right side. Those are the left side rules. Why? Because it's the left side of the sheet. And then we have the right side rules. That's the right side of the sheet. So the right side of the sheet, what we do, we go down, we're on a daily chart to identify that, right? Typically, when you're trading this style, I always have four charts up when I'm looking at stuff. I might zoom in on one, but I always have 4 up. But typically, you're going to want to have multiples of 6 to go from time frame to time frame. So in this instance, we're on a daily. I would want to start on a 4-hour chart. Why? 4 times 6 is what? 24. There's 24 hours in a day, right? So I would go down to a 4-hour chart to identify what I would magnify into a 4-hour chart to start looking for what I might potentially want to take as a long or to identify a zone. If I was identifying, let's say, trend on a 3-hour chart, I would go down to a 30-minute. Why? 30 minutes times 6 is 3 hours or 180 minutes. And then you can break it down smaller and smaller as you do that. But first thing we're going to do, we're going to start here on a 4-hour chart. Just me automatically, as you guys start to do this, you will see this. Those of you who have seen this before, oops, this isn't exactly wick on wick overlap, but this one is closer to it. But I know we're on a 4-hour chart. I know what this is going to look like as we start to move down to smaller time frames. So I'm going to go ahead and on the 4-hour, show you what I see immediately, and I'm going to mark. Big move in. For those of you who've seen this, big move in. I know when I have these aren't exactly matching wicks, so it's not like a perfect wick on wick overlap, but we're on a 4 hour. I promise you, as we start to go down smaller in time frames, you will get that. And eventually we will get to boring candles, move in, move out, all that good stuff that we're looking for. But this is about training your eyes to start seeing it quickly. Like I said, when I pull up all 4 of my charts right now, I can see that it's uptrend with the setup on the daily. I can see that I probably have the zones in here. Then I want to start coming down to smaller time frames to identify that more so. Honestly, I wouldn't even mark this on my 4 hour personally, just because I already know that I'm going down to a 60 minute or 30 minute. But it goes across, so we're good to go. So just to show y'all what I'm looking at, what I see these right here. That's the first thing. Those are the first indications I know that I have zones in here. Why? Because I know what this stuff looks like when we go to a smaller time frame, and y'all will too. So let's go ahead and go down to a 60 minute, right? 60 minute, that first area that I marked. Is this not a strong move in, basing candle, and a strong move out? Yes, it is. So let's look at this sheet here for those of you who have not seen it. What are the first things that we're looking for is a pattern like I've just identified. We're looking for what we call a strong move in and a strong move out. See this candle right here, this big green candle? This green candle closed right here. This opened here. Price shot up, came down just a little bit, closed, right? So that's a move in. Would you call that an explosive candle, a strong candle, a very bullish candle? They're really sending price up with that one. When it leaves this zone, same kind of thing here. You see we have it opened here, came down a little bit, shot way up, closed right there. And then a second candle doing that right behind it. Is that not an explosive move? Is that not a powerful candle? Is that not a very bullish candle? Yes, right? So you see the first thing on the right side where it says zones and levels. Oh, also, we're going to respect and pay attention to wicks now. It's all about the wicks. But first thing we're looking for is a move in and a move out. Here on the 4 hour, I'll go ahead and move this box back over just a little bit so we see on the 4 hour. First thing I looked for, I brought up the 4 hour chart. Once I identified that we were uptrend with the setup on the daily, I came down to the 4 hour, multiple of 6, 4 times 6, 24. Came down to the 4 hour. I identified this area here and this area here. Why did I do that? Because I see the wick on wick overlap. Again, it's not a perfect example of it because this wick's bigger and this wick's still a little bit bigger, but the more you see this, you get it. So that's the first thing I saw in the 4 hour. I'm going to get in. I need to see this more clearly though, because there's a lot that I can't really tell, and that's not even wicks. I need to see what's going on here. So I come down to a 60 minute. Once you go from like your first two, your trend time frame down to your first smaller time frame to start identifying an area, that's really, try to keep it to 6 after that. But after you're at a 4 hour, there's, you start getting to really weird numbers. So don't worry about it too far past then. It's just a good rule of thumb from whatever your time frame that you're identifying trend on, try from there to always come down to 6 by a multiple of 6. Unless you're on a 5 minute, really the closest thing you're going to get is a minute, but that's close to 6. So it doesn't have to be perfect, but coming from trend, the left side, to the first time frame that you go to on the right side to identify a zone, always try to make it a multiple of 6. So we did that. And we came down to the hour, and what are we looking for? The first thing we're looking for, move in and move out, right? Strength. You see how it's got strength in parentheses or whatever you call those things. So yeah, we have a move in, right? And we have a strong move out, right? Okay, what does it say beneath that? What's the next thing we're looking for? We're looking for boring candles. What's a boring candle? A boring candle is when you really have more wick than you do body. What does that even mean? Okay, this green candle came in here, right? This big explosive move in came in here, right? Came up to this, came right here, closed, right? This candle opened here, right? We don't know exactly what it did. It probably went down, and then it probably went up, and then it came back down to close to where it closed at. A boring candle really means if it's closing very close to where it opened and you have a lot of wick on either side, that's a boring candle. Why is that boring? Because price opened here or closed here, it opened, it went down, it went up, and then it came right back close to where it opened to make the close, right? Why is that boring? Because no one was able to take control. No one was able to say, hey, I'm in control. I'm either sending price up or I'm sending price down. What happened? It opened. Sellers tried to, there's always a fight. Every candle, there's a fight. That's why these candles go up and down. The sellers are trying to take price down. The buyers are trying to take price up. And whoever runs out of backups loses. So if the sellers run out of sellers, there's no more people willing to sell it. That's when the buyers take over. If they have more buyers sitting there than the sellers, they exhaust the sellers, price will move up. So on this boring candle, though, what happened? Price closed here on the candle next to it, opened, price went down. The buyers tried to take it up. The sellers came back and said, no, 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 y'all aren't getting through here. More sellers stepped in and brought it back down to here, and then it closed, right? That's why it's boring. Because, yes, it moved, but no one was able to solidify dominance, who was in control, whatever you want to call it. No one was able to say, hey, I'm the buyers, I'm in control, I'm taking it up. No one was able to say, hey, I'm the sellers, I'm in control, I'm bringing price down. They fought it out, it closed, so we call that boring. Why? Because it's basically, it's right where we started. This was 60 minutes. This candle moved around for 60 minutes and closed where it opened. That's boring. If I got into this trade and I wanted to see this trade take off, it has not taken off. It's back to where it started, basically. That's boring. I'm upset. I want something to happen. I want to see explosion. I want to see movement. So that's what a boring candle is, for those of you who didn't know. So what are we looking for? Again, step one, more or less, move in, move out, right? Big explosive move in. We see that. Big explosive move out. With then step two, we're looking for a boring candle. Everyone see how this is a boring candle? Yes. There's also exceptions to the, There's also exceptions to the rule in authenticity. In this instance, though, we have basically a perfect example of a boring candle with a strong move in, boring candle, strong move out. We'll break it down a little bit further here in a second. You'll see there on the sheet too, what we're also looking for is this stuff called white space. Well, you see, okay, good. On the new sheet, I have an example of a boring candle. You see what the boring candle looks like. Small bodies, big wicks on either side. That's boring candle. We have the next thing that we're looking for, even if we have a boring candle in there, we're looking for what we call white space. What is white space? White space is wicks alongside a wall.
Are you going to skip freshness and authenticity?
Oh yeah. Sorry. Freshness and authenticity is, I forget to explain that. It's not the biggest thing to worry about. Freshness is more important than authenticity. Both are important, but yes, let's go ahead and address freshness. Thank you very much for pointing that out. Freshness. So what does freshness mean? I'm going to go smaller for this. Boom, boom. Okay. What does freshness mean? Freshness means, has price been back to this area since the move had happened? Price is moving up. We have walls moving up. We know whatever was sitting back here before, it's irrelevant because price has already moved through it. So regardless of what everything looks like to the left of this area, it's irrelevant in reference to freshness. Since price left this area here, boom, this yellow box that we identified, price left here, right? Has price been back down to it yet? Has price ever come back into this box since it left that area? No, right? Okay, automatically that's fresh. If anytime you have, the only time that this won't be, when you have a rally, a base and a rally, meaning that strong move in, basing, boring candle, and strong move out, the stairs, you see how that looks like, kind of imagine like a stair going up. Anytime you see stairs going up, strong move in, strong move out, rally, base being the boring candle, rally, that is always going to be fresh. It will always be fresh because for price to come up, base out, and keep moving forward, if there's any sellers sitting here before, it chewed through them and it blew through them. So we know automatically that's going to be, that's going to be authentic. That's the next part. In reference to seeing this here, we know that it's fresh because when we also are identifying that it's authentic, we know first part that it's fresh because since price had left here, price hadn't come back into it. That's all fresh means. If whenever this box was created, if price hasn't come back into it, it's fresh. How do we know if it's authentic? You got to look to the left to either see, if you see this rally-based rally, these stairs moving up, you automatically know that it's authentic as well. Why? Because, let's just go ahead and put a line through this because we're going to have to go left. That's kind of in the middle of that area-ish, even on the low side. We're going to keep going left till we hit some sellers way back here.
So authentic is look to the left to what?
Yeah, basically, okay, authentic is looking to the left. Because we got to go way back to that. We're going to go down to this lower box right here to make a better example of that. Okay, let's just say this is the box that we're talking about, right? Here on the lower side. We see here, this is a rally-based rally, right? has price been back into it yet? No. So, okay, it's fresh, but is it authentic? Okay, how do we determine that? First off, if it's a rally-based rally, if it's the stairs moving up, it's always going to be authentic. When you have this, see here how we have a drop, a base, and then a rally, that's where you have to check. If you have a rally-based rally, it's always going to be authentic, and I'll explain both of these real quick. So let's just walk through the rally-based rally first, just so you know it's automatic, but just so you know what you're looking for. So in reference to this area, we have the rally-based rally, our zone. We know when we see that, we're automatically authentic. Why? Because when we look to the left, before this had happened, when price was like this, right? At one point before that had happened, price was like this. Price was moving down, based out. It was a drop, a base, and a drop, right? I'm going to try to keep my mouse out of the way because I know it's harder to see. We had this drop here, we had this base, and we had this drop, right? When that happened, there's still probably sellers, there's sell orders sitting in here. At least we have to assume that there is. Why? Because price hasn't been back to it. Until price shoots through it, as price moves up, boom, 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 the rally-based rally, we know that any sell orders that were sitting here, we are clearing out. So it doesn't matter, because for price to move through this area, we know that whatever orders were sitting here are cleared out. That's why when we have a rally-based rally, we automatically know it's authentic. Meaning, since this had happened and since price had moved through it, had anything ever been back to that point? No, it hadn't. That's why it's authentic. It's an authentic area because the buyers took over, the buyers sent price up. And since they sent price up, nothing has been back to it. No one's brought it back down in order to reestablish sell orders sitting there. Does that make sense?
So that's, you just explained rally-based rally, basically, you know, correct?
I'm explaining rally-based rally, but when you see a rally-based rally, you automatically know that it's authentic. Why? Because explaining here on the left side, when price came down here and was coming down a little bit lower, let's just say there were sell orders sitting in here, right?
Right.
When price came into it, sellers are going to be sending it down. Sellers are going to be sending it down. But as soon as price rallied, based out, chewing up any of the sell orders sitting there, and then rallied out of it, once the rally out of it happens, it clears out any of the sellers that are there. Because look, price is moving way up. Why are there sellers sitting right here on the other side of the current rally base? This already came through and moved through it. Whatever was sitting there has been cleared out. It is gone.
So basically, authenticity is like if you're looking for an uptrend, you want the sellers to basically leave. That's authenticity.
You want. Okay. Yes, you want the sellers to leave, but here, this actually, it's not only that you want them to leave, this is how you identify if they've left or not. Because again, let's just say somebody, this happened, right? We'll call this, and imagine this little box here, right? When this had happened in real time, this was a downtrend, sideways buys down. If we went down to a 30-minute right here, it's going to be downtrend with the setup, right? So someone's looking at this saying, hey, price has been moving down. We're downtrend with the setup on a 30-minute. That's what they're seeing. So there's sell orders sitting here, right? Until price moves and gets to that area. See, a price came in there, it shot it back down. This wick came in and it shot back down, closed. Why? Because there's sellers in here. It opened to the next candle and then shot all the way through it, based and continued moving up. It cannot clear through here. This candle cannot trade any higher than the top of this box if there are still willing sellers with orders in the market. If anybody across the entire world says, I want to sell euro yen at this price point from 125.319, between 12319 and 12523, across the entire world, anyone that had a sell order sitting here, until there are no more sell orders, that's what the fight back and forth between the buyers and the sellers. There were some sellers sitting here. That's why this wick came into here and it came back down and closed. But guess what? It opened, and either there was, as this had happened, more buyers are stepping in and placing buy orders to clear out the rest of the sellers that are sitting here. It cannot trade higher. If there's still someone sitting here saying, yes, I'm willing to sell this at 125.315. Once the last person across the entire world is no longer has an order there, then price will finally shoot through it. That's what these boring candles are up above that we were talking about. Price closed here, opened here, traded down, traded up, but still closed right here. That's because there's still willing sellers here and there's still willing buyers here. And it wasn't, no one was able to take full control until the next candle. Same thing here. There were willing sellers sitting here. Price moved into this area where there was willing sellers. They were able to send it down a bit. More buyers stepped into the market and beat out the sellers. It's literally like there was a fight. There was people sitting here saying, no, this is my corner. I'm holding this down. This is the seller's corner. Now more buyers, they called some of their friends. Their buyer friends came in and they had a fight. They beat out the sellers. They exhausted the sellers. They retreated. They ran away. They closed out their orders. They were whatever it was, they were gone. There were no more sellers there and price moved through. That's what's happening here. And but when you have a rally-based rally, you automatically know that the sellers have been exhausted. They have beat them out. So that means it's authentic. Moving forward, when you're coming back to identify these areas, it's authentic. Why? Because all of the sellers had to have been exhausted, beaten out, that all the sell orders had to be gone for price to move through it. Does that make sense?
So all the sell orders has to be priced through, correct?
Yes, in order for anywhere you're on the chart, I don't care, pick a place. Right here, right? In current time, as price is moving up, there are sellers sitting right here. In this area, there's sellers moving here. Price is moving back up. You see how each candle, do y'all know how open and a close works of a candle? Like, okay, this green candle, yeah, everyone knows that? Okay, so as the opens and close and the back and forth, that's because there's people willing to sell it and there's people willing to buy it. And as this is moving up, all the willing sellers are being beaten out and the buyers are taking over, but then they come in and that's what that back and forth is. So here, until there are sellers sitting here until price moves through it. Price cannot trade higher than here. I cannot be sitting with an order in the market saying, I want to sell this at whatever price, blah, blah, blah. I cannot have an order sitting right there. If I did buy a sell order sitting there, because once price hits my sell order, it will go down, or unless there are more buyers still willing to keep buying it and taking it up. They cannot pass this area if there's still anyone sitting there. That should say sell limit, but I clicked the wrong one. There cannot be a sell limit sitting there or a sell stop or there can be a sell stop somehow in another country if they were trying to go long when they were shorting, but we can't do it in the US. So there cannot be a sell limit order there and price move through it. It has to at least fulfill that order. And once there aren't any more sell orders sitting there, that's when price will move through. Make sense? If it doesn't,
yes.
the more we see
exhaust
this,
the sellers or the buyers.
Exhaust this, exactly. That's all it is. Exhaust the sellers or exhaust the buyers. Whatever way it moves up, if it goes long, if it continues the uptrend or the upward movement, the buyers are in control. The buyers won. They exhausted all the sellers. There are literally across the entire world, at that current time, there are no more sellers sitting there. It's moved through. So it moves up. So again, an easy way to identify if it's a rally-based rally moving up, it's always going to be authentic because it's a rally-based rally. You have to determine if it's fresh, if price has been back to it yet. If price has not been back to it, it's yes, looking to the right of the area. On the left side is where you have to identify if it's authentic. But if it's a rally-based rally, it's always authentic, because it cannot be a rally-based rally and trade above if there's still sellers sitting there. So why do we even need to identify that? Because if there is let's just say we were identifying this area here instead, right? This is a drop, a base, and a drop. We'll see it more on the 30-minute. But you see, it's not trading, going, and then going up. It's trading, basing out, and continuing to go down. And then it's continuing up. We'll probably see a little bit better in the 30 minutes. You see here on the 30-minute how price dropped. It based out, and then it took off. So that is a drop, a base, rally. It's not a rally-based rally. It's not a drop, base, drop. This is a drop, base, rally, right? Go back to the 60-minute real quick. We'll keep it on 30-minute, just that. You see, actually. So I showed you the 60-minute and 30-minute. That's what drop base here, dropped again, and then rallied, right? 30-minute. I know knowing what that looked like, it's going to be the drop base and then a rally on the 30-minute, right? Okay, we'll just keep it here on the 30-minute. We'll make this real, take us home. Okay, so let's just say we're paying attention to this area now, right? Actually, make this make it more realistic. There we go. Drop all these basing candles, right? We have the drop, basing, and then rally out. Okay, is this authentic? We don't know. Why do we not know? Because we have to look, if it's a drop-based rally, it's not a rally-based rally. It's not a drop-based. If it's a drop-based drop, it's always authentic. Why? Because whatever buy orders were sitting down below here, it has cleared out. If it's a drop, base, and then a rally, we have to look to the left to make sure we're hitting a wall. If we hit a wall to the left of the area that we identified, if we hit a wall, then it is authentic.
Done.
Why? Why is it authentic? Because, again, when we go further left, when price was down here, right? When price was down here, we probably had some sellers sitting, let me go a little bit bigger, sitting in this area here, right?
Hey,
Price
y'all,
had
can
been
y'all
moving.
turn your mics up? Can you turn your mics off, please?
See here,
AB,
it's
your
price.
mic.
Did we get them?
Yeah, I apologize. I didn't know I was
No, you're good. Yeah, just everybody on here, just do me a favor. If you're not actually speaking, make sure you're on mute. You can speak anytime. Just if you're not speaking, make sure you're on mute. Appreciate it. Okay, so here, price had been moving down, yes? Everything's moving down, right? There's still probably someone, as price had moved down, somebody saw this. This is a beautiful drop-based drop. Somebody said, again, you got to take in trend and all that other stuff, so it doesn't always mean it's going to work. But there are people in the world that said, hey, you know what? I'm willing, if price retraces back up to here, I'm going to sell it and take it down, right? Okay, so you have sell orders sitting here and all the way through. Price is moving up. Boom, touches in this area, right? Boom, drops. But then boom, continues to move up, right? Drops again. And we're at that pattern that we're at now. But in order for, if there was any moving all the way up here, if there was sellers here or here or wherever it is, right? And all of this, if there's sellers sitting here, until price does its thing, the fight happens, the buyers and the seller, until price fights through this and then clears it out and keeps trading above. Well, again, what is this? Is this not a rally base and a rally, right? So anything that when this candle traded through and closed above, there were no more willing sellers anywhere below that point. This rally base rally cleared all of it out, and there's still a wall sitting there showing you, hey, I chewed through all the sellers and price is moving up. The buyers are in control. All the willing sellers have been exhausted. I cleared them out. Right? So when we come back on this drop base rally, that's the only time that we have to try to figure out if it's authentic or not. If we look to the left and there's a wall, we know it's authentic. Why? Because it had to be authentic because this rally base rally cleared everything else back here, all the willing sellers across the world that were willing to sell this. As soon as this rally base rally happened, that cleared all of them out. So if you have a drop base rally, you identify where that base is, you then go to the left and see if you're hitting a wall. If you're hitting a wall, you know that it's authentic. Why? Because buyers took over, rally base rally, and moved through all the sellers. So as price is moving back down, rallying back down, where all the sellers had already been exhausted, now all that's sitting here is buyers. Why? Because price rallied down, it based out. It didn't rally down. What did it do? It rallied down, it based out, and it continued up, rallied up. It rallied, it based, and it rallied. With rally-based rallies, still clearing out all these sellers. But we have to ask ourselves, okay, on the buy side, is this authentic? Is this an authentic area? Look to the left. If there's a wall here from this rally-based rally, yes, it's authentic. Why? Because when this happened, when this big green candle happened, it cleared out all the willing sellers. Every willing seller that was sitting there got cleared out. It came back down. It based out. People were trying to take it down. They were trying to take it down, but there were more buyers than there were sellers. The buyers took over, cleared out all the sellers, and boom, took it out. So in reference to what we're looking for now, is it fresh? Has price come back into either of these areas? No, it hasn't. So we're fresh. Is it authentic? Here we have a rally-based rally. Rally-based rally is always authentic. Always authentic, so we're good here. We look to the lower level. Is this authentic though? Well, I don't know. It's a drop-based rally, so we got to look left and see. Is our basing to the left? Do we hit a wall? Yeah, we hit a wall here.
Yeah.
Okay, so that's authentic. Why? Because anything else that was there before has been cleared out.
Right.
Make sense?
That makes absolute sense. Yes.
Cool. So that is fresh and authentic. I know it's a long explanation, but I'm just doing this because you guys are going to understand it from here on. And then when you come back to the recording, you will get it. So again, okay, we were on our daily, right? We were up with the setup. 3 red actions, three red candles, action, anchor green, 3 green, high and low. What one hit? Oh, was it engulfed? Is the 2 red bigger than 3 green? No. We take the high side till we hit a wall, step 4. Who's in control? Low side till we hit a wall. Hit a wall here. Go down till we get the color change. Okay, so the color change happened here. High side way back here. We can't even see it. So who's in control? The buyers are in control. The lows are in control. So we call that what? We call that an uptrend. We go to step 5. Do we have a setup? In order for there to be a setup, we need to have what color action candle? Red. What do we got? Red, right? Okay, cool. Step 6. Do we have an anchor break? Is our red action breaking the low of our anchor? Nope. So we are uptrend with the setup. We then go to our right side of the chart to look for a zone. I pointed out here on the 4-hour chart. Why 4 hour? Because it's a multiple of 6. We're on a daily, 24 hours, 4 times 6, 4 hours times 6, 24, multiple of 6. Always go down to a multiple of 6 for your first chart. You're going on to start looking, fine tuning, looking for a zone. I pointed out on the 4 hour because I know this big move candle with these wicks right here. It's not an even wick on wick overlap, but I have close to an even wick on wick overlap. So I saw that here. I marked it. I saw it here. I marked it on the 4 hour. We then went down to a 60 minute because I know I'm going to see it more clearly there because I know it's going to be inside of those patterns. Again, so this was the first box that we marked. Let me get this one out of here now just because we don't need that. This was the first one that I marked, right? We go to our list. What are we looking for? And we're looking for, first thing, a move in and a move out with strength. What do we have? We have a strong move in, right? That big explosive green candle, boom, strong move in. Then I have the basing here, right? Oh, sorry, strong move in and then our strong move out. And then it even continued on the second. I love when you see a good strong move out and then another one behind it or an even stronger one, even better. It's like there's a lot of momentum, there's a lot of power, there's a lot of pressure there. It's a lot of buyers in the market taking up. There's literally no resistance. There's no sellers here. They're just chewing through sellers or there's no sellers at all and price just keeps moving higher. People are saying, oh, price is moving up, price is moving up. When this is happening, what's going on when there's no sellers here? Why does price keep moving up? Because people are seeing this in real time and they're saying, oh, buy market. This is going long, going long, going long, going long. Everyone's jumping in. No one's saying I want to sell. Anytime I do, that's a little back and forth slightly. You'll see on smaller time frames, but there's people jumping in saying, I'm going to buy this. I'm market order. I'm taking this now. I'm going long, right? So I have strong move in, strong move out. What's the next thing to say? Boring candles or exception. We'll go over exception here in a minute. Boring candles, right? What do I have here? A boring candle. You see the example on the sheet. That's where I have a close that's close to the open with wicks on either side. There's more wick than there is body. That's a boring candle. Why? There was a fight there. No one really took control. It closed close to where it opened. So the buyers didn't take dominance. The sellers didn't take dominance. The boring candle. So I have a strong move in. I have a boring candle and a strong move out, right? Is it fresh? Has price come back into it yet? Since this rally-based rally happened, has price traded into here? No, it hasn't happened yet. So it's fresh. Is it authentic? Well, it's a rally-based rally. So yes, it's authentic. We know that. On the low side, with that drop-based rally that we saw it more clearly on the 30-minute. We'll just do the 30 minutes so no one gets confused. That drop-based rally.
There's a wall, so that means
look to the left to see if there's a wall next to that pattern. There's a wall, right? Okay, so that makes it authentic because price, what did it do? It rallied here at base and it continued to rally through, cleared out all the sellers, left us a wall there. That wall there's a wall of protection. That's the buyers saying, we took over, we cleared through you, we're a wall, we're in control, we're moving price up. So when it came back down into here, based out and then took off again, all that's saying is these buyers took over. There's a wall to the left. Buyers are still in control. It's authentic because it cleared out all the sellers. So these are all fresh, authentic buyers that are sending the price up. So strong move in, strong move out. I'm going to go back to the 60 just because it's real pretty on the 60. Strong move in, strong move out, boring candle, fresh, price hasn't been back to it, authentic because it's a rally-based rally. Always a rally-based rally is always authentic. Is there a white space? Yes, there is. What is white space? White space is, get rid of that one, wicks alongside a wall. I'm gonna make this real big too. Wick alongside a wall or body of a candle. Wick alongside a wall, wick alongside a wall, wick alongside a wall. Let's go ahead and mark these. So whenever you're looking at wicks or white space, you have to ask yourself, what is a count? Is it an odd count or an even count? If it's an odd count, 1s, 3s, 5s, 7s, 9s, 11s, etc., it doesn't matter how many there are, it is established. We call it established. What does that mean? There are established buyers sitting there. Because what happened on these candles? This candle came up here explosive, kind of came back down, closed. This one opened here, probably went down, probably went up, probably closed right there. Well, not probably, closed right here. This candle opened. Sellers tried to bring price down, and then boom, that candle shot up, right? So when there's just one wick coming down and the candle comes up above, when there's one wick coming down, they tried to take it down. This pattern tells us that the buyers took over and sent price up. If price hasn't been back here to this particular area, we have to assume that there are still established buyer orders sitting there. Why? Because this candle actually opened, or I'm sorry, closed right here and it opened here, right? In order for price to be up here and there to be a wick here, price had to have come down before it closed up above. It can't close up above, then come back and leave this pattern here, right? It can't, because it opened here and it closed up here. Once it closed, the next candle started. So let's break this down. What does this mean? Again, and it very well could have shot way up and then came down, shot up and came down. It probably didn't. More likely than not, this came, opened here, came down, up here, and then closed. Regardless of how it happened, the thing we do know for certain is when it opened here and closed here, that was the last time this candle traded was right here. So this had to have happened before it at least closed. Okay, so what does that mean? A little bit further. When price, we're just going to assume that it went down and then went all the way up and did that thing. That's really probably what happened. We could figure that out, honestly, if we went down to a 5-minute, 1 minute, 30 minute, 10 minute, and looked to see how it actually moved. I'm willing to bet that it probably went down and shot up. So price closed here and then opened here, and then price came down, right? How is price going down? Because there's more sellers at that point. There's more people market orders saying, hey, I'm going to sell this and take this down than there were buyers at that particular moment because they were able to move price down. But as they're moving price down, there's buyers sitting here from this pattern already happening because this had gone, closed, open, probably went down, probably went up, closed here. Because for it to go down and for it to go up and close, that means for it to close up here, there were no more sellers there. For it to get past this and close up here. So that tells us, that leaves us a clue. White space. It's just a wick next to a wall, one single one. That means that price did come back down here, but in order for it to move up, there had to be more willing buyers than sellers until they exhausted the sellers and got the candle to close here. And the next one started. When the next one started, what happened? They brought price down here. They brought it down all the way to this area where there were already buyers, established buyers sitting here. They couldn't chew through them. The buyers took over, and as there were still buy orders sitting there and or market order buy orders coming in, moving price back up to close up here, it closed. There were no, at that point, there was not one willing seller in the entire world that had a market order. And all they could have there was like, what would that be, a sell stop down below if it came back down there? We don't know that. But if someone came in, there couldn't be anything sitting there for price to move up here because it closed up above. So when we come back to look at it, to look for clues, to look for white space, when there's one single wick alongside a wall and price hasn't been back to it, That tells us, yeah, price came down and they moved it up. But as they moved it up, there had to be orders sitting here moving price up. So that sent price up, left us a single wick alongside a wall. We call that established. That means since this happened and candle closed up here, since it was traded here last, price has never come back through it. All we know that there were buyers here sending price up. So we have to assume that there's established buy orders. Down below though, price had traded. See how we have the 2 wicks here? At least until that point, right? Because it came down here. This was the last point, furthest point that it got. It can't trade here again without trading here last if it closed up above. Price had to come down, and then it had to go up. This wick right here, it couldn't come down, trade here, and then jump up here and trade, and then jump here and go. And no, it has, for price to come down, how these candles work, it had to come down, then it had to move up. After it moved up and left this single wick here and moved up and closed, price never came back down to this area. What did it do though? At one point, price had never been back down here. These were all established buyers. Price closed here and went up, or price closed here, opened here, came down. There was never anyone there again because it went up and it closed until price came back in here. This is people with market orders trying to short this thing. But there were still enough buyers. This whole formation right here, this whole wick was willing buyers, and there were more willing buyers to sellers that continued to move it up. So with this wick along the wall, that's established. Down below, we have a 2 count, right? Established, cleared. Down below here, we have 1 count, right? Price hasn't been back to it since. That's established, right? All this is going to make a whole lot more sense the more and more we're going. Hopefully that's a good explanation of that, or kind of what that means a little more so behind that. So when we have a 1 count next to a wall, that is good. That is good established orders. There's still, we have nothing to tell us any differently than believing there are still willing buyers saying if price retraces to here, we're going to send it up. Down below that portion though, where there was 2, because at one point we saw the same thing here until price came and cleared. There were people when this is happening and price is moving up, this candle was solid green at one point. When this is happening, there are people jumping into the market, not jumping into the market, they're placing buy limit orders. They're placing an order right here, a limit order for whatever with a stop, 10 pips, whatever, let's just call it that. They're placing an order sitting right there with the stop loss down below here, right? That's what they're doing as this was a solid green candle until price came in here. When there was whatever buy orders were sitting here, it grabbed all those buy orders. There was still enough buy orders to exhaust all the people trying to sell it, and they sent it up, right? They sent it up, it closed, or went higher and closed up above. So there's at one point, I'm going to cancel that out. At one point, that was all established until price came into here. It only got this far into it. There's still, what that means is all from here to here, there's still willing buyers all the way through here until price came into this area, grabbed that, cleared it out. It was established. It cleared it out. It didn't clear this out. Why? Because price never came back to it. So there's very likely still willing buyers sitting inside of that. That cleared it out and it moved out. This happened first. This had to happen last because price can't trade below it and not trade here again. Price came down here. That had happened first before it left this clue, this little wick alongside this wall as it moved up. So when we come back to look at it as we're looking for our zone, do we have white space? Yes, we have 1 wick alongside a wall. Down below here, it's cleared out. So that's cleared. And then down below here, it's still 1 wick alongside a wall. We call that established. So we would have established. The 2 wick is cleared. The 1 wick is established. This also shows us kind of, though, you see the exception to the rule. You see on there, you have 2 candles with not matching wicks. One's bigger than the other one. See here how I have this wick down below is bigger than this wick here? And there's just a 2 count. There's not 3, 4, 5, 6, 7, 8, 9, 10, doesn't, whatever. There's 2 wicks with the bottom wick, or if we are going short, the higher wick being longer. That means that's the exception to the rule. Meaning if you just had this right here and you weren't even counting established, cleared, but you just see that, you know you have white space, and you have the exception to the rule because in essence, they weren't able to get to the bottom of it. So very well, there was still probably willing buyers inside of here to keep sending it up. But if it was just the 2 count and that wick wasn't there, we would have to, we automatically have to assume that that's cleared. If this wick came all the way down to here, we would say that whole portion has been cleared out. But it didn't give us that. Price came into this portion and sent it out. So that portion is cleared. There could still be some in there, but until it comes in for a third time to reestablish and take off, we don't know. So in reference to seeing this, and the more and more you see this, it'll make sense and you'll understand why. We have a 1 count established, a 2 count cleared out, 1, 2, and a 1 count established. But it's also the exception to the rule. Why? Because there's 2 wicks with the bottom one being longer. Really, we like it to be, I don't want it to be exactly that long, but you have to ask yourself, but this is still okay. You also have to ask yourself, what is the size of my zone? The size of this zone overall is 15 pips. Really, we could start it from, I would want to start it from where the white space starts, but you'll start to see a lot of times it will come and start touching these wicks on the other side. You'll see that a lot of times on the higher time frame, so I'm always aware of it. But to be like real precautious, you want to just get where there's white space. But again, we're here on the 60 minute. There might be white space here on the 30 minute. If we go into here, up above, no, there's not yet. Maybe even a 5 minute, you might be seeing some rally-based rallies in there with white space. Let's see if we do. See how up above in that section it was kind of just wall looking. There wasn't any basing or white space or anything like that. But when we go down to a smaller time frame, are we not having a rally, base, rally? Now there's white space in here. Now there's white space in here. If we go ahead, let's just go ahead and mark where there's white space on the 5 minute. And then in between here and here is also white space. So let's go back to the 30 minute.
I'm sorry, out of curiosity.
Yeah.
Out of curiosity, how long are your videos?
How long have we been at this? Honestly, mine have pretty much always been about 2 hours. The last one I did, I tried to do shorter. It was like an hour, 15, hour 20. That's the thing that I'm really trying to get with people is this is like a start to finish system. Like I've spent a lot of time doing this. I actually like went to school for this, and like I probably learning this style. I think I did like 10 or 11 5 to 7 day, 8 hour a day courses. Learning this particular, I learned it the first one. The whole thing behind this style is being able to sit in a classroom more or less for 5 days in a row, 8 hours a day. And by the end of it, you completely understand all this. You know how to identify trend. You know how to identify zones, good zones, where you can consistently make pips each and every day. I'm giving you guys a super, super, super condensed version of it. It's time intensive because this stuff all sounds crazy and not a lot of people are talking about these things, but once this locks into your head and you see it, you will never see anything else. You can do all this stuff in real time. I'm just trying to get you guys to understand. I'm not just telling you what it looks like. I'm telling you also why it looks that way. Because if you understand why it looks that way, you'll understand everything and why it's moving the way it does and how it does. And you're going to be really, really good traders if you just like stick to this and learn it.
Cool.
But yeah, I'm trying to keep it to 1 hour sessions, but you know, we wanted to touch on white space, boring candles, and exceptions, and we are gonna wrap up sometime soon because we're about an hour and a half into this. But yeah, and I do 2 sessions a week right now. This normally Mondays at 8 p.m. Central, 9 p.m. Eastern, and we're doing Thursdays at 9 p.m. Central, 10 p.m. Eastern for now. I might start doing a morning session on Thursdays just so we can be live once everybody's really getting this and understanding this, so we can jump into the live market. Well, I mean, it's live right now, but when there's a lot of movement and we can take trades and we'll see the stuff and it's a whole lot of fun. So to give you guys the example, you know how we went? Yeah. What was that?
I said that's cool.
Oh, cool. Yeah, no, cool. Glad you like. So you see how we went down to the 5 minutes and I marked it? Why? Because there was white space. There was rally-based rallies with white space in there. So again, we can play this whole box, but when we were looking at, it was, remember the 14 pips? Actually, we were looking at it on the 60. Remember we had this whole wall here. It's like, yeah, we can ignore that. why is there rally-based rallies in white space and stuff on a smaller time frame? Why do we know that? Because there's this wick. This is kind of more advanced. Don't focus too much on it, but with this wick being here, we know that there was a fight happening. It wasn't just solid movement up. This happened, so we know there's trading. There was a back and forth in here in order for this to happen and this to go through it. So I know when I go down to a smaller time frame, there should be some white space in there. There should be some rally-based rallies or drop-based rallies inside of that on a smaller time frame, and I went ahead and marked that there just so you guys could see. But here on the 60-minute, we could have just said, hey, this is our zone right here, and now we have a 6-pip zone. So it's like, hey, you want a 6-pip zone or a 14-pip zone? Do you want a 14-pip zone and be wrong and lose 14 pips? Do you want to have a 6-pip zone and possibly miss your trade and never get to your entry? Why? Because it grabbed the stuff that you could see more clearly on the smaller time frames, and that was enough to take it up. It's all about massaging the charts, balancing it all. There's a lot that I'm teaching you guys, but again, I've done this a whole lot, and the more and more we do this, you guys are just going to see it, and then you'll be able to make very informed decisions. Like, I don't mean to be like this, but like when I'm actually not being emotional and not letting the psychology side of it affect my trading, and I'm taking good trades that follow all the rules, that identify all this stuff after understanding this stuff, I honestly, I'm probably like 90% accurate. Like, I know it probably sounds crazy because most people are way less than that, but when you understand it to the depth and level and magnitude of what I'm really teaching you guys, you can be 90% accurate, like all day, every day. Because there might start being setups sitting there. The reason I'm explaining all this stuff now, like as you're seeing setup, okay, it's uptrend with the setup and I have all this stuff happening, but you're able to look at what's happening up above it and then also balancing what's happening on different time frames up above it. You can understand, literally, you can understand why it's going from down to up to down to up to all of that. You can literally identify why. Oh, it's going to come here. It's going to come grab this white space up above here. It's not enough. It's going to bring it down, but it's just going to bring it down to this area right here and pop it back up. And then that's going to shoot through there till this other area up above here. And that's going to be enough to send it back down. Like, I think in the classes I was in, we used to do competitions for who could be right the most amount of trades in a row. We had a student, I think he did, doing this style, he did 35 trades in a row accurate on the same pair. And that was literally shorting it from this, or taking it long from this area to something that he saw up above, to taking it back down, to bouncing back and forth 35 times in a row. And that was in like an hour or two, just on small time frames, using all this information. Literally tells you how to be able to do that, how to be able to, okay, it's here, it should be going to here, then it's going to go back down, then it's going to clear up a little bit more here, then it's going to come back down. Like, literally, this is what y'all will be able to do as you learn this. It's so incredibly powerful. And really, once you see it, it's like, there's really no other way to trade once you've seen it. And once you understand it, if you stick to it, it's mind blowing, honestly. But okay. So again, let's try to get wrapped up here. I identified this area here. We had strong move in, basing, strong move out, right? I got white space, kind of got the exception to the rule as well, but you also have to ask yourself too, okay, let's just say you don't have the exception, or however you want to look at it. More or less, this portion of white space to the bottom is what? 5.5 pips, right? This first section is 1.4. This bottom section is 2.8. So that's what, 4.2. And then the cleared out portion is 1.2. So over this overall piece, if we were just doing this here and just saying, hey, you know what, I'm gonna go ahead and put my entry right here above the white space, because you want it to be just slightly above. Also, because you have the mid, bid, ask. Because if you go from ask, see how this is gonna change as, okay, it's loading. See how that looks different now? Why? Because that's on the ask chart. That's the difference between the buyers, that's the bid and ask difference. That's the spread. I go to the bid chart, see how it's different even so on here, starts down here. I keep mine on the mid just because it's an overall average. It's averaging out the difference between the bid and the ask. And it's a pretty good depiction. So if you just want to be lazy with it and not check, go ahead and just put your order slightly above there. If that's how if you're just only trying to take this portion. But looking at this portion, this 5.5 pip area, only 1.2 is technically cleared out. So 4 to 4.2 is still established orders, and 1.2 is cleared out. No, that's more established and cleared. Boom, I'm taking that whole area. I don't care. I'm taking that whole area. That makes sense? If it's more of it, if the zone that you're looking at is more established and it is cleared out, boom, you take the whole thing. Or you can be, again, it's how conservative you want to be. I can just take this lower portion. I can just take this lower 3.2. If I'm just trying, again, you're gonna get a whole lot less trades because a lot of times it's going to come in here and grab something up above here. But if you want to have a minimal risk and load up, you go from having either 14 or 5 pips down to 3.6. 3.6 pips. I mean, I don't mean this, but like I do. Like, do you really care what you lose at that point? If it's 3 pips, again, have your rules, have your account, have all your percentages and all that stuff. I'm not saying don't do that, but you have the ability to load up. You might miss the trade, but hey, if you hit it and it touches into that area, you just got into a trade for 3 pips. And I'm telling y'all, I do that all day long. I'll find a trade for 3 pips, 5 pips, 4 pips, and it'll go for 50, 100, 200 off that little area. Because why? What is it? All you're doing, it's all about massaging the charts. I was uptrend with the setup on the daily. I went to the 4-hour, identified the zone on a 4-hour, and then I just chopped it down. I went to a 60 minute. Okay, I see that here. I went down to a 30 minute. Okay, I like that a little bit lower. Okay, see here on the 30 minute now. On the 30 minute, actually, let's go back and draw our original box. All right, it was this whole area, right? 14 pips, just so y'all know, 14 pips, roughly, 14.6. On the 60 minute, that's how that looked. On the 30 minute, though, you see now how that first wick that was on our 60 minute was established. On the 30 minute, that's actually been cleared out. Because again, price came up here, closed, opened here, probably traded up, and then shot down, clearing through whatever buyers were sitting at that time, came down to here, but then came up and closed here, right? Opened here, traded back down, and continued up. So on the 30 minute, when we do our count, we now actually have established, cleared. That wick on the 60 minute, that wick is now cleared out, right? It's established here, but on the 30 minute, it's cleared out.
Basically,
Boom.
it's established if, like, for the sell, the wick is going, for the buy, the wick is going below the sell wick. So it's showing that the buyers have gotten into the market and have cleared out all the sellers, and now they're going up. That's what you mean when you say established?
Established is, again, we'll go back to the 60 minute. When this had happened, when price closed here, opened here, traded down, came all the way up and closed here, when that had happened, this wick right here, there cannot be any sellers sitting here because price closed up above. The buyers took over with all of their buy orders sitting here, their market orders and their buy limit orders that were sitting here, bringing price up, exhausting the sellers and closing up above. When that happened, I can't explain it much deeper than this just because it's just all this is. This gives us a clue and a pattern on the chart to be able to visually see and identify as that's a 1 count. That's established buyers sitting there. Why? Because they exhausted the sellers and took it up. So it's established, meaning there's established. This showed that at least as of this point, there was nothing but willing buyers here. There were no willing sellers here because they exhausted them and took it out. So that means that there were enough established. There were enough willing buyers sitting here to send price up and clear out the sellers. When there's a 1 count and price never came back to it, all of it's established until price comes back into it. And again, here, 1 count, this is still established because it's established next to a wall. That was established because price had never been back to it. Price came back to it from here to here. Whatever willing buyers were here, that's because there was willing sellers coming in, chewing through the buyers. But as soon the sellers ran out of steam, and there were still willing buyers, and they sent it out of there. All we know is there was enough willing buyers to at least as of this point to exhaust the sellers and send it out. There might have been when price came down, that might have been the last willing seller, and there could have been there could have been somebody with a 10 order a standard sitting there to sell it. But there was 10 standards of buyers sitting here, right? Well, guess what? Only one of those 10 standards got filled. There's still 9 standards sitting there. If there was still 10 standards worth of sellers coming in trying to take price down, it would have kept going through till the next area of whatever was there. But let's just say there was 10 willing standards of buyers sitting there. There was only one willing standard of sellers. The 10 took out the one. There was still 10 buyers sitting here, and they sent price up. There might not have been another willing seller till up here, and there might not even been that. There might have just been continuing to move up. We don't know because price, again, breaking it down on a 1 minute, we could really figure that out. But we don't want to do all that. What I'm telling, this is giving you the understanding of what's going on in there, but we don't even need to you can go down to the 1 minute and second charts and all that stuff and really understand what exactly what the true picture is. If you want to save time, I want to do all this. I want to look at this whole pattern and chart. I want to do all of this left side, right side, everything we've been talking about for almost an hour and a half or more now. I want to do all of this in 10 seconds. That's what I'm teaching you guys to do. And that's why take the time and break it all down if you want to, or just one count next to a wall, that's still established. 2 count, that's cleared out. 1 count is established. Make sense? This is just a shortcut. This is what it looks like. This is a quick pattern. This is how you're able to see it and say, okay, yeah, that's established orders. That's cleared orders. That's established orders, right? Make sense? Miss Ramasa, what was that?
Yes.
Sweet.
Ramasa. Yes, Ramasa, like.
Cool. Gotcha, Ramasa. Thank you also for your participation, and Flacco, you as well. I appreciate both of y'all speaking up in this session.
Appreciate you, man.
Yeah, no, you're very welcome. You're very welcome. So yeah, we're gonna get things wrapped up though, but that's that's white space. Again, when we go down to the 5 minute and the 1 minute and the 10 minute, we're gonna see all the pattern formations. We're gonna see the drop base drop and the rally base rally and the drop base drop, then rally base, and all the stuff that's happening in here. And then we really will get the true picture. But guess what? All that stuff has to happen. There always is a smaller fight. For the bigger time frame always takes precedence. Why? Because it's just giving us the picture on the bigger chart. The bigger chart is the move. The smaller time frames is just the fight, the back and forth fight happening. Who's going to win? Who's going to win? Who's going to win? We see it more clearly from a bird's eye view, standing way back here. Can I not look back? We're doing all this stuff. We're spending a lot of time. Can I not just look back here and see that price is moving up? When this has happened on a daily, I know price is moving up. Why? Because I got green candles. Whatever sellers were sitting here, the green's wiping them out. The buyers are clearing right through them on the daily. That's what I see here, right? And then when we follow the rules, we know when this happened, we have uptrend with the setup. That's when we go down to the smaller time frames to start looking for stuff in our smaller time frames. My bird's eye view identifying trend is here on the daily. I know that I'm up with the setup on the daily. Price is moving through. Okay, that's the picture. That's what I know what's been happening. Was that not happening here? Was this not price? Has price not been moving up? Rally, base, rally, base, rally. I don't need to go down to a 60 minute, a 5 minute, a 1 minute. I see on the daily, price is up. And again, this changes back and forth. You got to go to what's current, but I can, a bird's eye view, I see prices up. Prices up, prices up, prices up. Came to retrace, keep moving up. Now I'm on a retracement portion that's giving us the rules that brings all of this together that I'm up with the setup on the daily. Go down to the smaller time frames to start identifying zones. Once we start identifying zones, again on the 4 hour, we identified this boom and this here, rally base rally, rally base rally, wick on wick. I know on the smaller time frame there's going to be boring candles inside of there. We went down to the 60 minute. Strong move in, strong move out, boring candles. Is it fresh? Yes. Because why? Because price hasn't been back to it yet, right? So it's fresh. Is it authentic? Yes. Why? Because it's a rally-based rally, right? Boom. Is there white space? Yeah. I've got wick, one count alongside a wall. I've got the lower portion of wick alongside a wall. So I know that on the, again, from more of a bird's eye view, I know this is good. This is a rally-based rally with more white space than not white space. Boom, that's good. And it's got the portion of the exception pattern. Again, it's not a perfect example of the exception. Focus more so on the white. Let me just look for a good, even better looking one of the exception, just real quick. this right here, like let's see how these two wicks are right here. This candle has a wick slightly above and that. Let's just say that's what we had seen. Let's say none of this other stuff was here. This was a wall right here, and we had the exception right there because it's a rally base and a drop. It's not a drop base drop, but I do have the wall to the left, so it's authentic. But if I had that exception right there, that would be, but it's also cleared out, established, cleared, established, cleared. So, but it shot through that. But that's kind of what the exception looks like. Two candles, one that opens and closes right next to it with a wick slightly above the other one. Y'all see that right here? Let's draw whips around that.
Yes, we see it.
So wait, what does that mean?
It's just an exception. Don't focus too. Honestly, okay. I don't even really look at those. All right. Again, I try to make this easy. If I got to start going and looking back and making sure it's authentic and, is there a wall here and all this, you can do that. And if that's what you choose to do. And if we want to spend more time on that, we will. Not today, but another time. Me personally, all I look for, I'm looking for a rally-based rally. Why? Because I don't have to think about it. This is all about being able to just click through. Up at the setup, there's, like this is how, if I came through this in real time, I'd have all four charts up. I'd see here, up at the setup, boom. So literally less than a second, I see up at the setup. I'd look here, knowing what my anchor was, I'd see that on the 4 hour. Literally, I would do both those steps in less than a second and a half. I can't see here because it's kind of, the chart's small, boom, zoomed in. I'd see that area there, boom, I mark it. Down here, this one down here, I got to think about. Not saying that I won't, but real quick, I see that's the low-hanging fruit. That's right there. I don't have to think about it. I don't have to break it down. I don't have to go to all these time frames. I see the rally-based rally. I like rally-based rallies. That's what I look for, rally-based rallies and drop-based drops. I'll do the other stuff too, but that's what I look for. Again, on the 60-minute, I might go down to a 30-minute real quick. Then on the 30-minute, okay, yeah, no, I do. Do I not have a rally-based rally here? Cool. I'm not even really paying attention to this stuff because I know on the higher time frame I had all that, but I'm seeing the rally-based rally here. Okay, yeah, I'll take that, or I will do some if I feel like spending more time to go through this. Ideally, you want to be doing this. When my trading is going perfectly or close to it, I try to spend 30 minutes a night, less than 30 minutes a night, literally clicking on the first one, looking to see what I have. No, sideways, skip it on the daily. Well, here real quick, just to tell you. Real quick, I didn't have this up, and I'm looking at y'all right now. I'm looking at this real quick. That is sideways, biased up on the daily. But I look down right below it. I see automatically this is down with the setup. Why? I did that in less than a second. I saw that this was sideways biased up with a down with the setup on the 4 hour. Okay. Down with the setup on the 4 hour. Why? Because I have green action. I have red anchor. My red anchor, high, low, not engulfed by the green, right? High side till I hit a wall here. Get the color change up here. Low side, hit a wall down here. What one happened more recently? High side. Sellers are in control, downtrend. What color does my action need to be for a downtrend? Green. I have green. Is it breaking the high of my anchor? No. Okay, so I'm down with the setup on the 4 hour, although it's sideways biased up on the daily. And just really quick, even seeing here on the 4 hour, do I not have a strong move in, boring candle, strong move out, white space, 1 count on the 4 hour? Yeah. I can go down to 60-minute. I see here, it's this drop, drop. Actually, is this Euro? Yeah, Euro Aussie. I think I posted a trade. I actually took this trade last night. I got into it about 1, and I was been up like, I think, that's why I had that box there. I think I was up like almost 70 pips on it at one point. Or was it Euro Aussie? No, I just drew that box. Never mind. I think I'm a different pair. But anyways, I'll just remember what that was. But yeah, so back to I kind of threw myself off right there. But yeah, sideways bias up on the daily, saw that. Down with the setup on the 4 hour. Because here's the thing, for the daily to move, the daily is 102 pips. The trend is going to change and do different things on the smaller time frames because that's what it has to do in order to complete the daily candle. The daily candle is saying, hey, I move 100 pips in the day, but it's not just going to move. It's not going to go from 100 pips, 0 to 100. It's got to do all this other stuff. So this might be coming in here right now. What does this move today, actually? This has only moved 44 pips. This might be coming in here to grab this area to keep moving down because it's biased right now. It was up. but it's biased right now. It might be doing a trend reversal. We talked about trend reversals a lot in the second series that y'all see recorded. That you'll see what I'm talking about with trend reversal. Right here in the daily, it could be continuing the uptrend, but it could also, it's sideways, so it could be in the process of a trend reversal forming into. If this candle closes green right here, and then tomorrow I get a red, and then I get another green, I've now gone from up with the setup, sideways biased up. I get a red close below here. I'm now sideways biased down, and as soon as I get the green, I'm down with the setup. And then I have a trend reversal. This might be grabbing this to continue to send it down to. It's gotta happen on the four. It's gotta have the reversal on the 4 hour before it happens on the daily. Why? Because that's a shorter time frame. There's 6 4 hour candles in a daily, so these have to do something 6 times in order before this one to close. And then down from there to a 60-minute, there's 4 of these inside of this. So as this is happening here, this is down with the setup. This is actually, when this was happening, this is 8 hours right here, starting at 1600 over here. This is second green candle. This second green candle is the 1600 candle. When that was happening, was it not down with a setup on the 60-minute? Green action, red anchor, not engulfed, sellers are in control. Step 5, green action, downtrend with the setup, not breaking the high of my anchor. I was downtrend with the setup, right? Until, boom, I got the close above. Anchor break, we did that in session 2. Anchor break, retracement back down, boom. Is that not also green, red, green? Y'all remember from that last session, green, red, green, continuing the uptrend on the smaller time frame. It went from down with the setup. This has all been down with the setup, down with the setup, down with the setup, to anchor break, to sideways bias down, because at that point, red action, green anchor, not engulfed. Who's in control? Highs or lows? Highs. So it's highs are in control because my action to be green. What is it? Red. So I'm sideways bias down. But I have an anchor break with sideways bias down. It was down with the setup. And as soon as I went sideways bias down, that says, hold up. Wait a second, there's a possible trend reversal happening because I'm no longer down with the setup. I'm now sideways down. And then boom, as soon as I got that, this candle closed or traded up here, boom, opened up here, green. That's actually what's just live. But here, okay, we'll take it a step further. On the 30-minute, was this not down with the setup to... I got the red close. Okay, we're good. To anchor break above. So that is now my action. Anchor sideways. Who's in control of the lows? Down with the setup to sideways biased up to up. Still sideways biased up to up with the setup with an anchor break. Down. Then we're what? Then we're still up, sideways biased up to sideways bias down, down with the setup, to boom, straight up. But on the 30-minute, though, we saw it on the hour. We're seeing what's happening on the 30 minutes. There's something's going on here. And if I go down to a 15-minute, it's going to be more clear. And you're just getting a different picture as you're breaking it down. Overall, though, I was sideways biased up, but as soon as I was sideways biased up on the daily, I know in the smaller time frames, hey, I'm probably going to be down with the setup. That's what we're seeing here on this 4 hour. This started back here on the 17th at 4 a.m. You know, let's see, 17th at 4 a.m. 17th at 4 a.m. is this right here, right? This right here is this over here on the 4 hour. Right now, I'm down with the setup on the 60-minute, and then price came down. So don't want to confuse you all with that, but it's about understanding what's, on the higher time frame, that overall it's going to do that. But in order for it to do that, it has to do all this other stuff on the smaller time frame. So if I understand how trend works and or anchor breaks work, again, back to this, when this was down with the setup, I got the close above here on the 60-minute. I could have just market ordered long because I just broke my 60-minute anchor. And it's climbing up here along these walls, more or less, to get to this area right now. And now this area is testing it. Is it going to send it back down, or is it going to continue moving up? Is this daily sideways biased up going to continue moving up and get the close above? Or is it going to start moving down or stay sideways? We don't know. But the smaller time frame, that's the fight. That's allowing us to figure out, hey, what do we want to do? Are we going to take it up? We want to take it down? What's the trend? Am I having anchor breaks? Am I having, yeah, it just gives us the options. And that's why we went into color change, momentum breakout trading, color change trading to the upside, and all those things that we touched on in the second session. Everyone definitely needs to see the second session. If you watch any of these, rewatch this one because we went over some really good stuff. This is the fourth one and the second one. Show you. Anyways, so yeah, there's always something is always happening on an assortment of time frames, but this gives you a set of rules to understand what is happening on all the time frames. And we can, while the overall movement is big on the daily, what's going to have these other uptrends and downtrends on the smaller time frames. And if I got a set of rules to follow to take trades, the in between, knowing where it's going and where's the next section it's going to. Right now in the 30-minute, we're anchor breaking up. We're anchor breaking up. There's really not much to stop it till we get to this area here. Is this not a drop base drop? Is this not on the 60-minute a drop base drop? And look, price came into here. Price came into here, literally got to the top of this. Is this not one wall? Is this not one wick alongside a wall? Is that not fresh? Price had been back to, again, go drop, base, drop, yes, fresh, authentic, whatever, blah. Is that not white space, one single wick alongside a wall?
Yeah.
Yeah. What did price do? Price came right into it and then fell out. It's falling out from there. Inside of this, what we saw on the 4-hour, we see it better on the 60-minute. Then just really see that white space on the 30-minute because we don't see the white space on the 60. We're still on a wall. On the 60, you're just seeing that wall there. I see the wick on wick. I see this wick below and wick above, so I know trading happened here. If trading happened here, and this is the blueprint, this is the picture that I get on the 60-minute, okay, but I have these wicks on either side. So I know when I go down to the 30-minute, I'm going to see more. There's going to be more of a picture. What do I have here? Ooh, do I not have white space on the 30-minute? Boom. What did price do? Came in and grabbed the one wick alongside a wall and brought price out. And now it's not a lot, but it's 8 pips out on a 14 pip zone. This is a 14 pip, 4-hour. This is a 4-hour zone, so that's a strong zone. You know, this might be enough to send it down. It's sideways on the daily. I don't like that. I don't really see a clear target on the 4-hour. It's got to clear through all. Is this not a bunch of rally-based rallies? 1, 2, 3 count. These two are cleared out. 1 count cleared out, but the exception. But so I have established orders here. I have a rally-based rally. I have a rally, drop, rally, rally-based rally, drop, rally, or drop-based rally. You know, I have all this stuff in here. I don't have a clear picture because it's got to clear through this. It's got to get through this white space, more or less. Down below here, this wick alongside a wall. Remember, we talked about racetracks. We love racetracks. Fly right through the racetracks. But seeing this right now, even seeing that I'm down with a setup on the 4-hour, I don't like what it's got to chew through. I want there to be no opposition. I want there just to be a wall for it to clear through. I don't want to see a bunch of wicks. So me personally, well, actually taking this trade right here just to clear this portion, is this not basically a racetrack? It's a bunch of wall, very little wick, bunch of wall. But is that worth it for, let's see, what is that? 30 pips, you know, do you want to take a 13 pip risk for probably an easy 30 pips? I mean, I like 4-to-1 minimum personally, but
Think about selling or buying?
for this would have been a sell. I honestly, I wouldn't take this trade right now. I don't like it because, yeah, I'm sideways biased up on the daily. I'm down with a setup on the 4-hour, but again, on the 4-hour outside, unless you're just trying to grab this piece, it's basically a 2-to-1. I'm not trying to risk 2-to-1. I'm trying to risk 4-to-1. I only have to be right once out of 4. Why am I gonna risk a 2-to-1? You have to literally be right 50% of the time, all the time. Anytime, if you're not right 1 out of every 2, you're losing money. I want to be, and really I like 10-to-1s and 8-to-1s and all that good stuff. Because also,
will price continue to go up or down?
Say it again.
Will price continue to go up or down after the yellow square?
Right now, here's the picture, where the daily is sideways biased up. It's undetermined. It's going to continue up or down. It's sideways. It's biased. The 4-hour is telling us, hey, it's sideways biased down. Price has been moving down. That's what it's doing right here. causing this to happen. But did this not come down in here and to hold all this area to send it back up? Yeah, and we can break all this down, all that good stuff, whatever. I don't like for there to be this stuff, and I'm not taking a 2-to-1 trade. But what's happening here on the 60-minute and 30-minute? I have anchor breaks to the upside. I'm now up with a setup on the 60-minute with anchor breaks. Anchor breaks moving up, and this is flickering red. That's red. That's my anchor. Not engulfed. Lows in control. Red action. Not breaking low of my anchor. I'm up with the setup on the 60-minute. So again, this stuff has to go back and forth, but I'm up with the setup on the 60. I'm up with the setup on the 30. That's a smaller time frame. We just got to ask ourselves, is this a good enough level to hold? Oh, time at level creation, very bottom of the sheet. Very important. Not saying that it doesn't work at other times. I only try to take trades that are created during either the London session or the London US crossover. So meaning anywhere from about 2 a.m. Central Time to 10 a.m. Central Time, give or take an hour. I'll do stuff that starts at 1, like pretty much 1 a.m. Central Time to about 10 a.m. Central Time. If the zone wasn't created during that time, for the most part, I'm not taking it. I'll do some market order stuff at this time because I'm not really worried about it. But why is that? The London session controls 65% of the market. 65% of the volume traded all day long for the 24-hour period is traded during the London session. And then you have the U.S. crossover that plays a portion into that. But once London gets out of the market, about 10 a.m. Central Time, 11 a.m. Eastern Time, it's over. And so when was this created? 4, 5, 6. Okay, it's created at a good time. But let's just say here on the 60-minute, let's do the count real quick. For the white space that we have on this upper portion, I got one. Actually, yeah. You literally break it down this way. All where one wick ends, the next begins. You got to mark it all. So up above here, let's make this big. Do I have a 2 count right? 2 wicks alongside a wall, established, cleared, 1, 2. So that's cleared out. Down below, I have 1, 2, 3, right? Established, cleared, reestablished. Okay, that's good. Down below that, though, am I not established, cleared? Right? So the only good portions, the middle, the up and bottom, is cleared out, right? So that's 3 point, and again, this is 3 pips, but we have 0.7, 0.8 roughly cleared out. Got 1.1 that's established and 1.2 that's cleared out. So I'm 2 pips cleared out, 1.1 that's established. More of that is cleared out. You have this portion down here. I see this. I've got these 4 counts below and above. I don't like it. I'm not saying it's not going to be enough. I'm not saying this is going to be enough to hold it, but for what this isn't a 90% accurate trade to me. This is, especially trying to short it. Because again, the overall daily picture is sideways biased up. Let's just for fun, what is that? 240, so that'd be 480. Let's see what an 8-hour chart looks like. 8-hour chart, I'm still down. I'm down with the setup on the 8-hour, but 8-hour and 4 hours down with the setup. I'm sideways biased up on the daily. Let's see what a 3-hour looks like. Oops, not 1580. See what a 3-hour looks like. Okay, 3-hour. See here, I'm down with the setup, action, anchor, not engulfed, highs of control, green, action, not breaking the high. But do you see how I'm pretty close? You see how this wick almost traded above here? Like I told you, if it hasn't closed above, you're good. But if you start seeing wicks trading above, that's an indication of, hey, it's not respecting our anchor. It might want to be going higher. It doesn't count technically until you get the close above. But on a 3-hour, I'm seeing, yeah, I'm still down with the setup on the 3-hour, but I'm getting pretty close to possibly having a close above, therefore violating my anchor, therefore no longer being down with the setup. It's got to happen on the smaller time frames first. I'm up with the setup on the 30-minute. Breaking anchors. I'm up with the setup on the 60-minute, breaking anchors. I'm getting close Once I break this anchor and close on the 3 hour, if price doesn't go back down, when the next hour passes, that's also going to be an anchor break on the 4 hour. And then as that keeps either hanging out and not, as long as it's not trading lower in another 4 hours, that will be an anchor break on the 8 hour. And as that's happening, anchor break on the 8 hour and not trading lower or starting to trade higher, it's going to be continuing the anchor break, because as of right now for the sideways bias down on the daily, that's just, it has to happen across these starting to move up to take this from sideways biased up to back to flat out up or up with a setup. It's got to happen on these smaller time frames, and we're seeing it on the smaller. It's really funny how it's inverted. This is the overall big picture, but for this to change and or continue, it needs to be happening on the smaller time frame, moving its way up to the upper time frame, showing you the picture. Unless the optimal stuff is up at the setup on the daily, up at the setup on the 4 hour, up at the setup on the 60, up at the setup on the third. When you get it across all the time frames, what stuff you're seeing, take that stuff. On all time frames you're seeing up, take it. But then also later on, not tonight because we're 2 hours, we're gonna finish. Then you start seeing what's on the other side and why is it going to turn it back around, and we'll get into that stuff later. But hopefully that's a pretty good overview, and I covered a whole lot, I know. But again, this whole thing is about understanding trend on all the time frames, what's happening on the higher time frame, what's happening on the lower time frame. The higher time frame takes precedence always, but the lower time frame stuff has to happen to either continue the higher time frame or change what's happening on the higher time frame. So again, for this 4 hour up with the setup, down with the setup, I don't like it. Why? Because I don't think that zone, look at this. I'm gonna get rid of these lines now. This will drive it home and then we're done. On the 3 hour now, on the 4 hour, that looked nice, right? I had a wick alongside a wall. But again, we like the wick on wick overlap matching because that'll give us what we're looking for with the drop base drop and just some white space. When I have just a small wick and this bigger wick, I know it's not going to be as pretty on the smaller stuff. Look what it is on the 3 hour. On the 3 hour, that is 2 evenly matched wicks. Why? Because that's why the count is so important. It was 1 count, but when we break it down smaller to see what's going on a smaller time frame, now we're on the 3 hour. That's cleared out. Why is it perfect to it? It's perfect to it because when it was moving down, price closed, opened, went up, came back down. We know they gave us a picture of it, came back down, so we know it was established. It didn't go any higher. We don't have anything to tell us anything higher. It went to this point, and this is where the buyers ran out. The sellers took over and took it down. Okay, cool. That's established. We knew that. But that was on the 4 hour picture. When we changed it to the 3 hour, when that had happened, price came right back to it. That's really what it looked like, and it cleared. This closed, this opened, went back up. Buyers, 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 ran out of buyers, still willing sellers, cleared out, sent it back down. Price never came back into here, so we don't know if there's anything sitting there. On the 3 hour, this is cleared out. Seeing this on the 3 hour, I would never short this right here. Based on this pattern right here, why? Because it's a drop-based drop, yeah, but it's cleared out. I don't like that. And guess what? Right above these 2 wicks, there's no wicks in here. I have a solid wall on the 4 hour. That's a quick 21 pips. Seeing what I see on the 4 hour, seeing this when price is trading down here, seeing that I have sideways biased up, yeah, on the daily, yeah, I'm 4 hour down with the setup, but I'm seeing up with the setup on the 30-minute and 60-minute with anchor breaks. I'm trying to use a 30-minute or 60-minute either anchor break or anchor break flat out momentum trade, or once we're going to get anchor breaks as dessert and appetizer stuff. We'll do that later. We touched a lot of it on session 2, but still there's rules for it. There's rules for entry, stop, there's rules for it all. But seeing this up, sideways bias up on the daily with a down with the setup with a weak level on the 3 hour, seeing up with the setup and anchor breaks to the upside on the 30-minute and 60-minute, I'm trying to either grab a market order anchor break to the upside or for a retracement, still using right side rules to take an up with the setup, to already have a good position with a small stop as it's moving up. To sit, yeah, it's going to fight against this for a little bit, but I'm already in a good order from down here. Do you really care if I got an order down here and I'm up 30 pips right now and it's bouncing back and forth on this, chewing through it? Because once it chews through it, it's probably going to clear that other 20. I'll take, I mean, that's a little 50, there's probably a 5 pip setup in here for a 58 pip trade. This is going to give me trouble. So you're going to have that fight. So be comfortable with it. But if you just want to take the one trade and wait for it to do that thing and take the whole 58 pips, great. Or if you want to take the smaller time frame stuff for your long till you get to this section and then get out of your trade, take a quick 30 pips, seeing this zone here that you don't really like, but it could send it back down. Depends on how you want to look at it. You have rules for it being a down with the setup on the 4 hour. So you could take it for another short back down to say right here where I have this rally-based rally that's also retesting anchor break areas. A lot of times it wants to retest these areas. So it might come back down to here to continue the upward move. So that's kind of balancing. Again, don't do it just like this, but that's taking it long on the smaller time frame up to that area we identified, getting out, having a rhyme reason to take it back down. That's a down with the setup zone, taking it back down to probably a anchor break retracement area with up with the setup with the zone inside of here, balancing 3 or 4 different reasons why to take it long to continue back up to that 58 pip. So you might have grabbed it for 30, take it back down for another 26, 27, so almost another 30, you're at 60, then getting that 58 pip movement, you're now 58 plus 36, you're at 108 pips. Then continuing the upward move, and as this, if we get on the daily, it close up above, and we're back to up or up with the setup, and then more zones can be forming. We're already up 108 pips. We might see another level that's forming a beautiful up with the setup or retracement to, it might retrace back to this anchor. Boom, I've moved my stop up. I'm locking in. Say I'm at 9, if it turns back around, I'm at 90 pips profit. But guess what? I did an add-on here as the daily is continuing up, or I'm still using the smaller time frame stuff for add-ons and reasons to bring it up further. I'm 108 pips up, but then I just added on another position. And then another position as it's bouncing. Honestly, I thought that was a daily. Hang on. On the daily, let's see. Where is this? On the daily, I would say on the daily, this thing's at least going to right here. Why? Because it likes to get to the tops of walls. It's got these wicks here. But again, if I do account established, cleared, established, cleared, established, cleared. This is cleared out. That portion's cleared out. Established, cleared, established, cleared, established. This small portion of wick right here, the box that I just drew is still established. That's still established. Up above this is cleared, and then a little bit more of established. That's mostly cleared out. Established, cleared. The rest of that's cleared out. That lower portion's cleared out, all this stuff. Above that, I have a straight wall in the daily. So from where it's at right now, if I can get a close above here, I have a little bit of resistance with just that small portion of established and this very little small portion of established up above. If I get the close above here, that's basically knocking all that out. I'm continuing the uptrend. It's going up to the top of this wall, or at least to where the bottom of that wick is. That's an additional 180 pips. So if I can be in it right now at basically 111, and then as this continues to close up above here and having reasons to get back in, I'm just adding on. I'm just adding another 120 on top of my 108. I could have just had I could not be in it. I'm getting 200, 240, whatever that is, pips. Could be off of using a 30-minute anchor break to the upside, understanding that my daily sideways biased up, using the 30 minutes for an entry. That could have been, like, if we took something like, again, we can, actually, let's just do this. We're going to do this last thing, and then we're going to call it a night. Let's just go ahead and mark on the 30 minutes. We're going to mark this anchor being broken. I'm going to mark this blue because I always told y'all if I have a light blue line, that's an anchor break on 60-minute hour on the smaller time frames. If I have a lightish green line, that's an anchor break on the 4-hour or daily. Okay, on the 30-minute, when this was down with the setup, right? Action, anchor, not engulfed, sellers in control, not breaking the high, down with the setup, right? That's the top of the anchor. Price is going up, 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 boom. I get the close above my anchor, right? On the 30-minute, that's a close above, so that line represents my anchor break line. I could understand that I'm sideways biased up on the daily. I'm seeing, actually, before we even do that, let's take it to a 15-minute. So I like doing this on the 15-minute. On the 15-minute, that same pattern that we're pretty much referring to, this is down with a setup. Boom, but as this happens, I get a close above this first. So I'm seeing on the 15-minute first. That's, oh, snap. Okay, I got on the 15-minute. I'm aware, or I'm being super aggressive and going, but I'm aware. And then watching it trade. As of this point, as soon as I got this close above here, as soon as this candle went red, I'm up with the setup. Why? Because that was a red action where that wick is. That was a red action. So red action, green anchor, not engulfed, lows in control, red action. I was up with the setup on the 15-minute. I was up with the setup on the 15-minute, right? I have this white space alongside here, so I could have seen that happen. Then as soon as I had that red, I'm up with the setup, right? I'm up with the setup. I was up with the setup here, continuing up with the setup with white space here. Again, I'm showing you on the 15-minute just because it's a wick on the 15-minute. We can go down to the 5-minute or the 1-minute, and I'll show you how that's rallied. You know what? For fun, let's just do that too. I'm going to draw this longer. Let's take this down to a 5-minute. There's going to be a rally-based rally in there. You see how I have a rally? I have a rally, base, rally, base, rally, right? I still have white space in here. Let's take it down to a 1-minute. Rally, base, drop, base, rally, base, rally, drop, base, rally. Again, we're going from 15-minute to 1-minute, not slow time. On a high time frame, it's going to be a bunch of white space and all that stuff too, but I can still see, I know there's going to be drop, base, droppers and rally, base, rallies in here. White space, there's white space on the 5-minute, white space. You see on the 5-minute there, yeah. White space, rally, base, rallies. Back to the 15-minute where we were at. That might have been that portion, regardless. Anyway, so what I'm showing y'all here is it was down with the setup, then boom, sideways bias down, up with the setup, had it in that wick right there, white space, came back here. That could have been my entry right there. That could have been my entry on the 15-minute for 3 pips, 3-pip entry, 3-pip risk, price. That would have stopped us out. But that's on the 15-minute, but you get the picture. I'm just showing you the time frames. But as that's doing it, then I get to close above here, close above here. Let's go to the 30-minute when we were really talking about it. Just kind of breaking it down for y'all. Again, that 15-minute stuff, that's super, super aggressive. But marking that line, that's where we got the anchor break and close up above. We could have just taken that flat market order, 17 pips, whatever. That's a lot of, for me right there, doing it that risky, that's a lot of risk. I'm going to wait till it's more clear. Boom, getting the close aboves or using the 5 minutes. With close above. See here, we got that close above that same line. That line represents a place back here on the higher time frame. I'm getting down the 5-minute close above. That might have been what you were looking for. I like to use the 5 minutes for entries. Why? Because it's a small risk. For me personally doing this was in the first place I would have done it. Because I had this close above. See how this closed above? And it's also up with the setup. When that happened, it was up with the setup. And what did it do? Y'all are going to see this. It retraced back to the hour and 30-minute anchor line that it broke already to a wick-on-wick overlap with white space. That's your zone right there. When this had formed, if I didn't just flat out take a market order here for the 5-minute close above, I had the retracement back to the line, wick on wick overlap, strong. That's not a strong move in. Strong move out's more important. But again, we go down to the 1 minute and see what that looks like. 1 minute, strong move in, boring candles, strong move out, right? Drop back into here, boring candles, strong move out, white space, all that good stuff. That is 3 pips. From 3 pips, we are now, it went up from the 3 pips, 25 pips for the 3 pips, knowing that we were anchor breaking on the 60-minute, 30-minute, 15-minute, 5-minute, anchor breaking up on the sideways biased up to an area that might give it a little bit of trouble, send it back around. Again, I wouldn't short this area. I don't like it. I think it's going to continue up as of right now until we get some serious trend reversal stuff on these other time frames. Starting to trend reversals on the 30-minute and hour, turning into that changing on the hour or 3 hour and 4 hour. Because if it starts doing that, if I can get this to happen on the smaller time frame stuff, as it's trickling its way up, to the 4 hour and 8 hour, it's doing the same thing on the daily. And the daily will be going from up with the setup to sideways biased up to sideways biased down to down with the setup or whatever it's going to do. But again, it's just balancing all of it. I like getting in and taking this little 3-pip risk. Imagine if we got this 3-pip risk and just took it up to where it's going to end up continuing on the daily. I know that it's sideways biased up on the daily. I take this entry for a 3-pip entry, 3-pip risk. To, hey, let's just see what happens. To grab that whole. You know, if that's 176 and it was down like another 176 another 25, that'd be 200 pips. 200. That's an example of a 200 pip zone for a 3-pip risk. Using the 5 minute, using what's happening in the 30 minute, 5 minute, hour to correlate with the higher time frame, knowing what's happening in the other time frames too, what's going to give us trouble. I know there's going to be some trouble here. I'm not saying if it's going to hold or not. I really don't know. Oh, more of the picture. On the 60 minute, that's that drop-based drop. Established, cleared, established, cleared. That's all cleared out. Then that little portion is still established. There's more established there on the hour. But again, when I see 4 wicks instead of 3 or 1 for even a decent portion of that, I don't like it. It's ugly. And I saw what it looked like on the 3 hour. It's ugly. I don't like that. Will it give it some trouble? Probably. And it is right now. But I'm trying to use the smaller time frame stuff for giving me reasons to ninja into the market, grab a quick entry with a little bit of risk. If I end up being wrong on this and I lose 3 pips, oh well, I lost 3 pips. Who cares? But if I make 200 off 3 pips, what? I mean, what's that like? I don't even know. 300 to 1, 400. I mean, that's 3 into 100, 30, 33, 33. I don't know. That's a lot. It's been a long day. I barely slept. I don't feel like doing that math. That's a pretty good return. 200 pips for 3-pip risk. And it's not, I can go back into my emails and start. I can show you trades all day long where I do this. 3 pips, 4 pips, good for 50, 100, 200 pips. But we're going to wrap up because we're 2.5 hours in almost. So hopefully y'all enjoyed. Are there any last minute questions before we get off?
One thing, I know that I'm new.
Yeah.
You're good at what you're doing. You're teaching everything well. I understand it. I understand for the most part because, I am new after all.
Yeah.
You make everything clear. Really appreciate you, man.
Hey, I appreciate that. I really do. It means a lot to hear that feedback. Also, for you being new, there are 4 sessions. This will be the 4th one put into our Discord.
Okay.
First one, definitely knock it out. The first 2, knock it out. The third one, honestly, I slept like an hour, and I was just like, I haven't even rewatched that one. I don't feel it was all that great. First one, second one, 4th one. Those of you who have seen this before, rewatch the second one and rewatch this one. We covered a lot in this, and we're going to just keep building on this. Like, again, right now, we're all at level 1. Like, I'm touching on a lot of different things, but everyone's understanding, we're going to get everybody to level 10, and y'all are just going to be slaying trades. But, yeah, let me ask y'all a favor.
Thank you so much.
Oh, you're very welcome. Those of y'all who are still here, I'm trying to also grow this business as well, and I'm trying to do that on social media. So if y'all find my teaching valuable, you could show that back to me. I'd be greatly appreciative. Y'all give me the follow on Insta, like anything that I do that's trading related, because I'm just, again, trying to build my online presence with this. I would be greatly appreciative of that. I'm going to type my Insta here in the box. It's Get Ninja Fit. Typing that in here right now, but I'd be appreciative of that. If not, no worries. It's all love, so we're all good. But yeah, this is, we're going to end here. Appreciate all y'all being here. Next session is going to be, you're very welcome, Austin, is going to be Thursday night at 9 Central, 9 Central, 10 Eastern. Again, as we're doing this more, I'm probably going to end up changing that to a Thursday morning session. That way we can just be in the market, but I'm going to get everybody a little more acclimated. Oh, also, let's see if that document came. Yeah, okay. I'm going to also put in the chat right now. This is the most updated version of the rules. Actually, I'm still going to have to do this again. There's still some stuff on here that needs to change. Never mind. Next session, I'll either put it in Discord or we'll have it next session. But, yeah. I'll See you guys next time. Appreciate the time. Oh yeah, if y'all have any questions, literally, if y'all have any questions anytime, I'm not always logged in Discord, so hit me up on Insta. If you have a question, you wanna hop on the phone or something, or just send some voice notes or whatever. Show me a chart, ask me something. I'm here to help y'all. The more I help y'all, honestly, it helps me. What's that?
I said thank you.
Yeah, you're welcome. Y'all have a good night. Thanks for bearing with me for 2.5 hours.
Thank you. Good night.
You have a good night.
Good night.